This month, Life Insurance Strategies Group is in Taberna, Mexico. We're out on the Gulf of Mexico today, which if you were to swim this direction for a very long time, you might hit New Orleans. So this month's video blog is a companion piece to the written blog, which was about Canadians who are leaving their tax residency of Canada and living a stateless life. And at Life Insurance Strategies Group, we're seeing an increasing number of clients who are leaving their countries, or at least leaving their country's tax regimes, and then living a stateless life. And what does that mean for their life insurance? Because life insurance needs don't necessarily go away just because some of your tax burden does. There's still wealth transfer considerations to make, and we're seeing an increasing number of countries whose citizens are leaving doing things to continue to tax them once they've fulfilled other requirements to leave their jurisdictions. So for instance, in the blog, the written blog this month, when we talked about Canada, Canadians need to pay an exit tax to be able to leave their tax regime. However, countries like Canada and others are saying, well, just because you've gone left us for that purpose for taxes, we're going to do other things like have a tax on an unused property. So if you're keeping a house in Canada and not living there for a certain amount of time, you're taxed on it. Or even owning a home in a place like the United Kingdom can subject you to transfer taxes on that property later on. So what does that mean for the life insurance needs? So obviously, it all depends, of course, on where the person's going to be living and where they might live in the future. And that's what we tell our clients is, okay, so you've left, let's say, for instance, Canada, and maybe now you're rotating among countries. You're spending some time in Canada, maybe some time in the United States, and some time in Cayman. There's a big expatriate community in Cayman of Canadians. And so, okay, so having a policy today that might cover, some wealth transfer needs, depending on, where your wealth is held, is important. But even more important is where you might be someday. So for instance, Canadians, you might have grandchildren, and so that might bring you back into the Canadian tax system. It might bring you into the U.S. tax system. Let's say it brings you into the United Kingdom tax system. So having a policy that meets tax compliance in whatever jurisdiction you might go to is important in planning. Because if you have a policy that's not compliant and you end up moving someplace, that could be problematic. You could lose the tax benefits of that policy. So these are very complex considerations, but at Life Insurance Strategies Group, we handle these all the time. We're fee-based consultants who help our individual and institutional clients make decisions about complex life insurance transactions. And if we can help, reach out to us at lifeinsurancestrategiesgroup.com.